Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at Smith Weekly, including Jack T, Craig S, Dave V, Todd A, and Andy J. On the program today is a new guest. Mr. Luke Alexander has joined the podcast. Luke is the president and CEO of Newcore Gold. The company is focused on the development of its Enchi gold project in Ghana, West Africa, which is in the advanced stages of exploration with economic studies underway. Newcore Gold is listed on the Toronto Venture Exchange under the symbol NCAU, as well as on the US OTC markets under the symbol NCAUF. Luke, welcome to Smith Weekly Discussions.
Yeah, hi Andrew. Thanks a lot for having me on.
Yeah, it's a pleasure. It's good to finally have you on here, and certainly Newcore's a company that we've known about for a number of years, and great to have you on the program to talk about where the company is today and give our audience a bit of an introduction. Well, as normal course here, Luke, we typically like to have our guests, especially our new guests, for the audience, cover off your background and experience, and then, of course, how you came to the job at Newcore.
Yeah, absolutely. So my background is I spent the first 20 years of my career on the investment banking side of the business. I was in London for 12 years, covering all the big global natural resource funds out of the UK and Europe, advising different ASX, TSX, London listed companies on primarily mining and oil and gas transactions around the world. A number of those projects were in Africa, so that's where I got to become very familiar with the African continent. It's also where I got to know the team involved and the team behind Newcore. Our chairman, Doug Forrester, and lead director, Blaine Johnson. I worked very closely with them when they were at Newmarket Gold. Some of you may remember that company vended in the Fosterville asset, raised $25 million. It was a $10 million market cap company at the time, and went on to get taken out by Kirkland Lake Gold about 14 months later, and inevitably ended up being about $5 billion of value within the Kirkland Lake portfolio. So that's where I got to know the team. Worked closely with them when they were relaunching Calibre and vending in the B2 gold assets in Nicaragua. And if you follow Calibre Mining, you'll see that they've now bought the Marathon, the Valentine project in Newfoundland, and are en route to being a 500,000 ounce producer. About 3.5, 4 years ago, I was talking with Doug, and we said, listen, we should really get back out and get behind the Enchi project. It's a great project in Ghana, great jurisdiction, and that's when he asked me to join as CEO of the company. And I turned around to him and said, "Well, why don't you step up as chairman?" So that was in May of 2020. We relaunched the company. We raised some money, and since then we've been very active on the project. So started on the investment banking side of the business, but have been CEO of Newcore for just about 4 years now.
Luke, that's great. And I think some of our audience is fairly familiar with the folks at Calibre. We've had Darren on the program, Ryan. And so good progress coming out of what was a single jurisdiction, single group of assets essentially into the US, into Canada now, which goes to speak to the efforts of that team and, of course, the people. And then, of course, as you mentioned, some of the past successes there as well. So I appreciate that.
So for your listeners, Ryan King, he's also on our board. Again, Ryan was obviously involved with Newmarket. Then he was at Kirkland Lake for a brief stint, as well as Darren Hall was at Kirkland Lake for a brief stint. And then obviously the entire team came back together at Calibre. When Calibre kind of vended in the B2 gold assets, that's when Ryan moved over there full time, and I essentially stepped in as CEO of Pinecrest at the time, which we renamed Newcore on the back of us obviously relaunching the company and starting to push the project forward again. So Ryan King still remains on our board. So just thought I'd highlight that, given it sounds like you've had him on the program before.
Appreciate the information there. Of course, I think Gray Smith is over there with you guys as well. With respect, just to get your thoughts and views on the market, it's always good to get different opinions and the views of our guests with respect to the specific markets that they operate in. But any thoughts, Luke, at this point, as far as the gold price, where we are today, sentiment return to the juniors, which, mixed, but we're seeing some of that. And then how you're seeing this current improvement in gold prices going forward. Do you think it's sticky here? Do you think it's here to stay as far as that upside breakout?
Yeah, so from a gold price perspective, obviously we're seeing all-time highs at the moment. I mean, one of the things that I've found very encouraging over the last couple of years is that gold has remained trading around all-time highs, despite the fact that we've been seeing rates increase throughout that entire period. So we've had real strong fundamental buying from a number of the central banks, and typically you see gold selling off in that type of environment, but gold has held in over that period. And now that we're starting to see the talk of rates being cut, in the U.S. and around the world, we're starting to see gold breaking out again. So I think we're in a very constructive environment. The fact that gold has traded over around all-time highs for the last couple of years and now is starting to break out on the back of rate cut expectations, I think is setting it up to be a very constructive environment for gold over the next couple of years. And if we look at some of the consensus numbers coming out of a number of the banks, we're starting to see that being reflected in some of the gold price expectations for end of this year and rolling that into 2025. In terms of the equities, we haven't, really seen a big breakout in the equities yet. I think there's a lag happening at the moment, and in any kind of up move, do the equities lead the move or do gold price lead the move? I think in this case, we're seeing the gold price lead, and the equities are lagging a little bit. It may take a quarter or two of 2350 gold being reflected in some of the producing companies to really see the market stand up and take notice of the significant positive impact that those type of prices have on cash flow and ultimately return to investors. And then, typically we see a waterfall effect as the seniors start to catch a bid. We start to see that rotate into the mid caps and the juniors. So that's kind of my view on the market right now. We're still seeing the seniors trading, close to multi-year lows, as well as the juniors trading close to multi-year lows. And we're kind of in that bucket with the rest of the companies. We'll probably get into talking about it in this show, but I can kind of reference some of the valuation where we're trading today and some of the upside potential that we ultimately have. But as a general comment, I think we're in a very constructive environment for the gold price and then ultimately for gold equities.
Thank you, Luke. And yeah, we'll get into, certainly we want to hear a little bit about how Newcore fits into this, and of course some of the comparables. We'll get to that definitely in a few moments here. Why don't we start in here with Newcore now? And I'd like to have you cover the capital structure in a moment, Luke, but how about just a brief overview of the company for us first?
Yeah, so Newcore Gold, we're advancing the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by a very robust PEA that we put out in 2021. We're in the process of updating that PEA, and we'll have that out in the next month or two, which incorporates a larger resource that we put out in 2023. So district scale exploration fundamentally underpinned by a very robust economics for the project and backed by a management team who's truly aligned with shareholders. So we own 20% as a management and board of Newcore, and that's stock that we've bought alongside investors over a number of years. So To put that in perspective, my average cost base is about 21, 22 cents a share. We're trading at 19 cents a share today. And our board would be anywhere from 25 to 30 to 40 cents a share in terms of average cost base. So we're truly aligned with shareholders to make Newcore a huge success, as well as we have tremendous backing from the institutional investors, currently 45% owned by institutional investors. These are investors who are focused on the mining and precious metal sector, who recognize the tremendous upside that there is in our Enchi project, as well as the team who's pushing the project forward.
Good, concise overview. Thank you for that. With that, why we're on cap structure here, you already covered off one of the key areas that I did want to cover, and cost base. Really appreciate you coming out of the gate with that as well, as far as where you guys stand there, and gives the audience and folks listening in a bit of a flavor. With capital structure, talk about the shares outstanding for us, and also the cash on hand, and how far you see that cash getting you down the road here in 2024.
Yeah, so we currently sit at 173 million shares outstanding. As you mentioned at the start, we trade on the TSX Venture as well as the OTCQX. So in both of those markets, we currently have about $4.5 million of cash on the balance sheet. Again, as 20% owners of Newcore management and board, we want to see as many dollars as possible going to the ground and obviously advancing the project. So we run a very low G&A, so we're covered for the next 12 months. And obviously the next big catalyst for us is the releasing of the PEA in the next month or two, as I mentioned. So we've got about a $30 million Canadian market cap today. So if you take the cash off of that, call it about an EV of 26 million. So for your US listeners who potentially look at this on the OTCQX, we've got about an EV of about $20 million US or $26 million Canadian. When you look at that on a per ounce in the ground basis, we're trading at about $11 or $12 per ounce in the ground, which is less than it costs to discover those ounces in Ghana. And I'm sure we'll get into our 2021 PEA, but at a high level, at an 1850 gold price, you're looking at an after-tax NPV of $300 million US. So we're trading at less than 0.1 times the NPV of the project. So I see these as tremendous levels for incoming investors, as well as for investors to ultimately add to their positions. And I think it's important to mention that that's something that the management and team, management and board have done over the last number of years. I've participated in every single financing that we've done for the company, as well as actively bought stock in the market, which again I think highlights our commitment to the project, as well as the tremendous amount of upside that we see in the company.
Luke, always appreciate you giving us a little bit of comparables there to look at. If you've been enough in the sector and you've been looking at these junior resource equities for so many years, and to see some of these valuations, even compared to like 15, for example, these are some pretty low beat up numbers at this point. It reminds us yet again of the opportunity that is out there. Obviously requires patience and a stomach, but nonetheless, there is good opportunity out there. With some of the folks, I know you mentioned some of the members there at the company, but anybody on the key staff front, maybe on the ground there in Ghana, that you want to mention, and then we'll move on to getting into the project.
Yeah, so the bulk of our team is based in Ghana. We've got a small office in Vancouver from a management perspective, including myself. But the bulk of our team is in Ghana. That team is led by Dan Wilson. He's our country manager. Dan is a Ghanaian. He's worked on the Enchi project on and off for the past 20 years. He's been directly working with us for the past 12 years. So where that's obviously critically important is obviously that continuity of relationships, at a government level, but all the way down to the local and community level, where we've got very good relationships with all of the communities that we operate in. And obviously, our view from that perspective is that all stakeholders ultimately need to benefit in a project to push it forward. From a local perspective and ESG perspective, we've got the town of Enchi, which has got about 15,000 people. It sits about 15 kilometers or 10 miles away from our project. But all of our personnel who manage the ESG side of the business for us are from Enchi. So again, very strong, deep relationships with with all of the stakeholders across our project. So that's the team in Ghana. I think it's also important to mention Greg Smith, and I know you mentioned his name, and it sounds like Andrew, you probably know Greg. So Greg's our VP of exploration. He was actually running Caliber Mining up until when it became a producer. At that point, he came and joined us full time, given his expertise on the exploration side of things. And that was in and around when we relaunched the company, or it was when we relaunched the company. And Greg's worked on these greenstone hosted deposits around the world throughout his career, over a 30-year career, made millions of ounces of discoveries. So he's a great partner to have on the project, and also has worked closely with Dan Wilson on and off for the past 10 or 12 years as well. So good deep relationships there throughout our team in Canada, but more importantly on the ground in Ghana.
I'd like to chat about Ghana for a moment, just generally as far as jurisdiction for gold mining in Africa. Of course, Luke, there's always a discussion about jurisdiction. And in Africa, of course, we have various tiers of jurisdictions nearby, perhaps places like Namibia as an example of maybe a better place to be working, rather than the extreme opposite of a place like Sudan or Niger, for example. And then better could be, slightly better, I guess, starting from the bottom up here. Burkina Faso fits in there. But then to me, Ghana and a place like CDI, for example, fit somewhere really in the middle, maybe upper end, Luke. But talk about that because, the audience, needs to understand also the importance of jurisdiction, and Ghana fills in there pretty well here. And I'd like to have you just talk about jurisdiction as you see it in Africa, and then also Ghana's specific stability for natural resource industries as an economic generator for the country.
Yeah, so Ghana, without a doubt, is a tier one jurisdiction. And if I can sum it up in one phrase, is you've got Newmont, who's going to have 23% of their managed portfolio coming from Ghana. It will be their second largest, the Ahafo mine, their second largest gold producer after the Nevada Gold Complex, and it's within 50,000 ounces of that, over a million ounces coming from Ghana. So I'd caveat everything I'm going to say about Ghana with don't listen to me, but look at what Newmont and the other major mining companies are doing. So I think that highlights what a tier one jurisdiction it is when you have the world's largest gold company willing to have their second largest project on the planet in Ghana is speaks for itself. But taking a step back, so Ghana is sixth largest gold producer globally, just behind the US and Canada. It produces just about 5 million ounces per year. As a result, it's obviously very important for the economy. It's important for taxes. It's important for jobs in country. So you have a very well aligned government in country. Whenever I'm meeting with the various government officials, first question is, when are you bringing this into production and how can we help? So there's that support to ultimately push the project towards construction and ultimately production, because it's very important for the economy. As I mentioned, you've got Newmont in country, but you've also got Anglo Gold and Gold Fields, who both have significant operations. So you've got three of the top 10 largest gold producers in country with significant operations. I mentioned that Newmont's putting another $1 billion into the Ahafo project, which sits to the north of us along the Sefwi-Bibiani belt. And if you look at Newmont's recent reshuffle of their assets, within their tier one managed portfolio, that will end up being 23% of their total production, and it'll be the second largest producing mine after the Nevada Gold Complex. Newmont can invest in any country on the planet, and they're willing to put that kind of capital into Ghana. So again, I think that speaks to it being a tier one jurisdiction from a security perspective, but also from a political stability perspective. The other thing is in terms of one of the trends we're seeing in North America and other parts of the world is it's very difficult to attract good to highly skilled labor. There seems to be this black market for the mining industry where people don't ultimately want to get jobs in the mining industry. That's the complete opposite in Ghana. We probably get 100 resumes through our inboxes every month, and you've got two mining universities, dedicated mining universities, one in Tarkwa, one in Kumasi, that obviously is producing a number of very highly skilled students who are eager to join the mining workforce, as well as the in-country training. When you've got Newmont and Anglo and Goldfields as large operations in country, you end up with a very well-trained, highly skilled workforce that we ultimately are able to leverage off of. And then the last thing I might just, or actually a couple more things I might mention. One is from a service perspective. With 5 million ounces of production per year, there's a huge amount of service companies operating in Ghana that we can leverage off of. For example, from a drilling perspective, GeoDrill, who we've used along with Fort Longyear, GeoDrill is a 4-hour drive away from us. So if there's ever any issues, we can have someone on site within half a day. From a metallurgical test perspective, you've got a couple of tier one SGS and Intertech are both in country. These are international assay labs that we're obviously able to use that are also within a 3 or 4 hour drive of our project. So all of those things are what adds up, in my view, to it being a tier one jurisdiction. And I think we're also seeing that in terms of some of the M&A activity in country. We've seen a lot of M&A over the last few years, and these are large mid caps who are ultimately looking to get into the country because they recognize the what a great jurisdiction it is, and obviously how well endowed it is from a geological perspective.
And I was going to ask you a little bit about that as far as comparables and those types of things that are happening in country. But I think you nailed it pretty well in the sense that this is just a guess. I haven't looked, but my suspicion is the revenues from mining operations, specifically on the gold side, is number one for Ghana. And so I think if you have that type of alignment, which I suspect it is, that it's terribly important for the government, for jobs, technical experience, skills generation within the country. Speaks to the point that it's very important for the country and it's a great economic generator. So I appreciate your comments on that. And I guess with that, why don't you just talk briefly here right before we dive into Enchi in a moment. But as far as M&A activity in the country or valuations in the region, peer comparisons, anything you want to say on that point?
Yeah, well, maybe I'll start at a kind of higher level and just highlight Africa. I mean, if we look at the amount of M&A in Africa over the last 6 months, it's without a doubt been the most active area on the planet, and I think that's because of the quality of the project and ultimately the ability to get projects into production. You've got Osino, who obviously there was a full-on bidding war for that company. You've got OreCorp, again, another full-on bidding war between Silvercorp and Perseus. So we're not only seeing one buyer for these advanced stage construction ready assets, but we're ultimately seeing multiple buyers coming to the table. You've then got Tieto, who again has had a bid for that company. So we've seen a lot of M&A activity in the country. And then we've also seen a lot of investment as well. I mean, we've got the Lundin Group, who has stepped into Montage in a much bigger way and has brought that under their umbrella group of companies. So again, that's a group that obviously has experience around the world and has decided that they want to make a significant investment back into Africa, where they've been very successful in the past. In terms of Ghana itself, Cardinal Resources, maybe a company that a number of your listeners are familiar with, but that project had a full-on bidding war between Nord Gold and Shandong. Shandong ultimately ended up winning out in that bidding war, and that company ended up selling for about $90 per ounce in the ground. If we look again from a comparable perspective, Newcore today we're trading at about 11 or 12 per ounce in the ground. So obviously there's a huge gap between, call it 12 and 90. Arguably, Cardinal and the Namdini project was further advanced. They were at a feasibility stage. They had more ounces in the ground. But my view is there's a big opportunity for us to close that gap between 12 and 90 and re-rate the company through that period. We also in Ghana had Chi Fang make a bid for for Golden Star. So that was a couple of years ago. We've got Asante, who's consolidated the Bibiani and Chirano assets, and then we've got Goldfields, who are merging Tarkwa and Idiapreme. The other thing from a Ghana perspective and investment perspective that I think is worth highlighting is you've got the Minerals Income and Investment Fund in Ghana, which is effectively Ghana's sovereign wealth fund. And this is a pool of capital that Ghana is using to start to invest directly in projects and ultimately support the mining sector. So we saw them make a strategic investment in Asante. They've invested almost $40 million US into that company. We've also seen them make a $33 million investment into Atlantic Lithium. We're also seeing them make a significant investment into the small scale mining sector in Ghana to ultimately clean that sector up, but also institutionalize it. They've got a gold trading business. So this is again a really good example of how the government of Ghana wants to support the industry, because they recognize the tremendous benefit that there is from mining. And I think that really is a contrast to what we're seeing in a number of other parts of the world, where it's roadblock after roadblock in terms of trying to get projects built. In Ghana, we've got a sovereign wealth fund who's investing directly in projects to get them built, which is a real contrast again to what we're seeing in other parts in the world. So high level, a tremendous amount of M&A activity over the last 6 months. Specifically in Ghana, we've seen bidding wars for assets, and then a number of strategic investments in country.
Luke, thank you for that. And why don't we get into Enchi for a moment? Give us an overview here of where the project stands today. And with that, Luke, why don't you give us some context on the past PEA from 2021, and then also what work you intend to accomplish over the rest of this year. And I know that's going to spill into 2025, go into 2025 for us a bit.
Yeah, Andrew, I might suggest we break that into 3 questions, because otherwise you're going to hear a half-hour monologue from me, which might really bore your listeners. So why don't I start with a high-level overview of the project, jump back in with the PEA, and then we can jump back in with the additional work, because again, otherwise it'll be a half-hour monologue, which with those cold drinks in everyone's hand might put them straight to sleep. So starting with the project overview. So we've got a large land package, 248 square kilometers in size. We've got great neighbors along trend from us. So to the north, we've got the Chirano mine, which has a historical endowment of 5.5 million ounces. To the north of that, Bibiani at 6.5 million ounces. And then that Ahafo project that Newmont owns is to the north of that, sitting at about 20 million ounces. So you've got the main Bibiani shear that runs north-south up the SmithWeekly Bibiani belt. And where the mineralization sits is you get these second and third order splays coming off of that main Bibiani shear. When you add up the strike length across our project of those second and third order splays, you've got over 100 kilometers of strike length. So again, that's where we refer to it as being a district scale exploration um, project. We've identified over 25 targets to date. That's through soil sampling, trenching, drilling, and we're obviously continuously prioritizing which of those targets to focus on. We've only drilled 9 of them so far, of which 5 of them host our or hold our current resource today. So again, lots of exploration upside for us to go after. And then I think I'd highlight that if you look at the mineralization that's currently pit constrained today, it sits within pits that average only 80 meters. In terms of the resource itself, we currently sit at 740,000 ounces of indicated, plus an additional 972,000 ounces of inferred. So the 2023 resource that we put out ultimately grew in size, but also importantly, we moved 740,000 ounces into the indicated category. So we obviously de-risked those ounces. Importantly, within that resource update, we also put out our first ever high grade underground resource. So about 136,000 ounces today, which Andrew, you and I'm sure most of your listeners would recognize that is not a mine today. But what it is it's a proof of concept for us at Newcore. If you look at these greenstone hosted deposits along trend from us, Chirano, Bibiani, Ahafo, where you'll see a lot of them increase in grade and grow in size is as you identify some of the high grade feeder zones that extend at depth. So, that 136,000 ounces that we've outlined within this resource update comes from 3 different areas. And if you go and look at some of the long sections within our presentation on our website, you'll see, where we've identified some of these high grade shoots. We've drilled, down to about 250 to 300 meters in select areas on our project. When you look at Chirano, directly to the north of us, to put that in perspective, they're currently mining at 800 meters below surface, 1.5 to 2 gram per ton material. They've drilled down to 1.2, 1.3 kilometers below surface. So obviously, our pit constrained resource sitting at 80 meters today, we feel we've really just scratched the surface and have a tremendous opportunity to ultimately continue to chase some of these high grade feeder zones that we've now started to identify to depth to ultimately build a underground resource. But it's important to mention that all of our deposits also remain open along strike. One small example would be Boeing. Our resource at Boeing, which is our second largest deposit. It's currently constrained within about a 4 kilometer strike length. But if Greg Smith was talking to you on this call, he'd highlight that we've identified over 10 kilometers of anomaly and shear running north-south throughout that Boeing area. So big opportunity for us to continue to systematically step out along strike and add ounces at surface, but we also want to show the big upside potential that there is from an underground perspective.
I appreciate the comments there on that, giving us a context of where we stand here and how this looks. With respect to the potential expansion of the project, intended to be first and foremost conventional open pit heap leach operation. In the world of mining, fairly simple plans here, which is good because even these simple projects like this can be tremendously economic and can be great operations. What do you see as you guys continue down the road here? New PEA is going to come out revising, adding resources, adding some additional optimization that you guys have done since on the exploration work there and the expansion work. But what do you see as a viable goal for this project expansion and maybe the exploration potential? You can speak to that a little bit here. in terms of how you see this coming together as maybe an internal goal for the company in terms of gold ounces, what you expect to put together here before you guys move into, say, PFS or the feasibility study, what that production profile looks like as far as reaching that critical mass on mine life, and then, of course, a sustainable annual production number that makes good economic sense for comparable operations, say, in Ghana.
Yeah, so Andrew, we've reached that critical mass already, and I think probably the best way to flag that was the second part of your last question, which was asking about, our 2021 PEA. So we did put out a PEA in 2021. We've got a full dedicated PEA slide deck on our website. So anyone who wants to get into the detail, I'd encourage them to go and have a look at that. We've put a tremendous amount of detail in there. But what we outlined within that, and again, this is covers the critical mass piece, and why we've got that critical mass today. We outlined a very simple open pit heap leach project at a 1650 gold price, which was the base case we used in that PEA. We've got an after-tax NPV of 212 million, after-tax IRR of 42%. And one of the things that really helps drive those economics is the fact that heap leach projects don't cost as much to build as CIL plants. So our capex for that is $97 million. We obviously get to leverage off of all the infrastructure that sits across our project. We've got forestry, gravel roads. We don't need to be building camps. We've got a power line that runs through our project. So all of those things contribute to it being a low capex project. But the big thing is the fact that it's a heap leach project. If we now look at the economics at an 1850 gold price, or let's say maybe a 1950 gold price, why don't we use 1950 given we're at 2350 today? We're looking at an after-tax NPV of 347 million and a 60% IRR. So one of the things a lot of our institutional investors, like to look at is what's your NPV to capex ratio. So call it 97, call it $100 million of capex, you're getting a $347 million NPV. So 3.5 to 1 NPV to capex ratio under a 2-year payback. And that's averaging 89,000 ounces of production per year over about a 10.5-year mine life. So those are extremely attractive metrics for a project in Ghana, and it's an extremely attractive metrics for a project anywhere on the planet. And obviously, again, with 80 meters of pit constrained resource, all of our deposits remaining open along strike, our view is that this is just the beginning from a project perspective. But our view is moving this and putting it into production makes a ton of sense because the cash flow that we can generate from the project can then ultimately create a self-funded district scale exploration company that ultimately never needs to come back to the market. So these are the 2021 numbers. I did highlight our updated resource and some of the numbers that came into that. So we're now taking that 2023 resource update and we're wrapping a new PEA around that, which we'll have out in the next month or two. So it's going to incorporate a larger overall resource, as well as we should touch on all of the de-risking work that we've done on the project as well, and I can get into a little bit of that. But it'll be a much more de-risked project that we see in the upcoming PEA, as well as incorporating a larger overall resource. So I think those will both be hopefully very well received by the market when we finalize our PEA in the next month or two.
And just one follow up on that. What do you see in there as far as what do you guys would expect? And I'm sure there's already been some work on this, but recoveries. What do you see in there as far as recoveries? You can give us a flavor for.
Yeah, so that's a great question, and I think that also covers some of the de-risking elements that we're gonna see in the upcoming PEA. So in our 2021 PEA, we used 79% recoveries. If we look at all of the test work that we've done since then, we've done over 20 column. These are bulk heap leach tests. We've done 2 bulk samples, which were 15-ton samples, one from Seum, one from Boeing, 15 tons each. After 60 days, we averaged 91.7%, sorry, 91.9%, so call it 92% recovery from those 2 bulk scale pilot heap tests. From the over 20 column tests that we've completed, we've averaged 91.7% recoveries. So what that's highlighted is that this tropical saprolite material that we've got at our project is very amenable to heap leaching. And as a result, what that does is it further supports all of the test work that we've done from a bottle roll test, from a column test perspective. And I would expect that we'll be able to increase the recoveries that we use within our upcoming PEA. We won't use a 92% recovery because you typically like to, or at least from a conservative perspective, what we would like to use is a discount to the test work, but it will support the numbers that are used in the upcoming PEA. So we've been very pleased with the results from all of the met work that's been done, and a lot of that work is now pushing a PFS or FS level work on that side of things. Anyone who is interested in kind of getting into the detail of the Met test work, we've put out a couple of press releases specifically on the Met test recoveries. One was in Q3 last year, and we provide a lot of detail in there, including recovery curves and all the data that anyone could want to use or look at. So I just encourage people to go have a look at that if they want to get into the nitty gritty.
I appreciate the overview on it though, Luke, and the new PEA, being able to take a look at how the CapEx turns out on the revised PEA and all the other adjustments you guys have brought in since 2021. So that'll be good to see when that comes about. A couple other things that came to mind here. With respect to schedule, what do you guys see here as far as you guys are a competent group? What do you see as the schedule to advance? Are you going to go to PFS here and move that forward, or is there more of a goal to get with this project as it stands now, move towards that FS faster and get this into production? Because the build time doesn't appear to be much here. The capex is palatable. It's not like you need 400 million USD to bring this online. What do you think is your goal in terms of time frame to possibly take it forward with that strategy? Obviously there's always the potential for a takeout, but to move it forward, when do you see that this project could potentially be in production if you guys took it that way?
I mean, that's the way we're taking it, is towards a construction decision and ultimately putting it into construction. I mean, the economics of the 2021 PEA, and we'll see what the final economics for the updated PEA look like. But the economics ultimately drive the decision to push this towards construction and ultimately production. So that's the track we're headed down. Obviously, on the back of the updated PEA, we'll sit down as a management team and as a board, and we'll review it in a lot of detail. We'll obviously meet with our major shareholders. We'll meet with the government, and show everyone the results of that updated PEA. And on the back of that, we'll ultimately make a decision as to how we take it forward from there. But my expectation is that we'll be pushing it towards a advanced stage PFS and ultimately a construction decision. Again, a lot of the work that we've done so far is pushing a PFS FS level already. So one of the big things that is required to wrap a PFS around any study is having ounces in the indicated category. If we look at the ounces we've got today, as I highlighted earlier. We currently have roughly 740,000 ounces of indicated material. Our view is we'd want to have, probably somewhere around 1.1, 1.2 million ounces of indicated. If you put an 80% recovery on that, you're all of a sudden looking at, maybe 900,000 ounces of recoverable, which is a nice kind of 9-year, mine life at 100,000 ounces, something like that. Again, we got to work through the numbers once we've got the updated PEA. But just to give you a sense of how we're looking at it, is we want to have enough ounces in the indicated category to justify a large enough and long enough mine life. So that's the piece that we'll need to look at in more detail and decide as a management team and board as to whether we want to push forward with the additional infill drilling that would be required to move it towards a PFS. And one of our thoughts behind going to, let's call it an advanced stage PFS as opposed to straight to an FS is, once you're at an advanced stage PFS, call it subject to final detailed engineering, at that stage you can start having discussions with debt providers, different lenders, banks, to fund the project, and you can still have the flexibility to make some tweaks and changes. Once you're at a full FS with final detailed engineering completed, there's a lot less flexibility in the project. So we like the idea of having the flexibility to make some tweaks at the 11th hour, but also be able to start having the discussion with different debt providers and other project funders.
And I appreciate you pointing that out. That's obviously important to some of the banks out there and reviewing some of this and what the economic study is showing, of course, to be able to kind of put their models, wrap it around that, if you will. And then, of course, the expansion potential and mine life extension, I think that can work in parallel to even a construction decision and even going into commercial production. This project does have expansion potential, as we well know. So I appreciate those comments.
Sorry, Andrew. I'll just make sure to kind of just comment on that. So from an expansion perspective, again, all of our deposits remain open along strike. So our view is that continuing to systematically step out, we're going to discover a lot more material that we'll be able to throw onto the heap over time. And then from an expansion perspective, as we discover more sulfides at depth, then the natural would be to stick in a CIL plant at some stage to have a step change from a production perspective. So you've got the heap leach operation continuing to produce gold, but then you add a CIL plant next to that, and that's where you get the real step change from a production perspective. What we like about putting the current project into construction is that you're now able to leverage off of the cash flow that's being generated from the project to ultimately fund the exploration as well as the expansion of the project towards a CIL plant. So you're not, again, as you mentioned, looking at $400 million out of the gate. All of that can be self-funded, which we see as a tremendous optionality opportunity for Newcore and for our shareholders to not have a project that requires huge capital out of the gate, but ultimately can be staged along the way.
And I think that's the right way to approach this as well, Luke. So I appreciate you covering that piece of it off. With respect to two things here, I want to have you talk on. First of all, I'd like you to speak just a little bit to permitting here. Fairly straightforward process there in Ghana, and I don't suspect any troubles on the permitting front, but speak to that. And then also with this company and you guys with this focus of going into production, cash flow, operating company, what would be the plan once you guys get down this road? Would you guys continue to work in Ghana and continue projects in Ghana? Or would you look to, at that point, once you're in cash flowing mode and things are going well, would you guys look to expand and pick up some other projects and start basically building a small mid tier?
So from a permitting perspective, that's one of the things that we really like about Ghana. Again, whenever I meet with the various government officials, first question, from them is when are you going into production and how can we help? You know, as we've discussed, it's very important for jobs, the economy, taxes, everything else. So very motivated government to ultimately get things permitted. Specific permitting perspective, one of the things that we will look to do is apply for a mining lease. We've got the full application ready to go. It's just a matter of figuring out when the best time to submit that application is. That we expect could be permitted within 12 months. One of the key things that's required to apply for a mining lease is to have a social and environmental baseline study completed. We have completed that, so obviously that's an important step. So as and when we decide to apply for a mining lease, we think we could get that within 12 months, which again, for you and a number of your listeners, when you compare that to other jurisdictions around the world, it's a huge advantage of being in Ghana, from that perspective. In terms of us building the company beyond our Enchi project, as major shareholders, 20% owners of the business, I mean, we're ultimately going to do what we think makes sense for the company and for our shareholders, and obviously work with our shareholders to decide what makes the most sense. So whether that's projects in Ghana, in Africa, or other parts in the world, we're really, jurisdiction agnostic. I mean, from where I sit today, it's hard to see finding a better place to work than Ghana. But obviously, we're obviously going to keep our eyes open to every and all opportunities that are out there, because that's ultimately my job, and the management team's job is to be finding ways to create value for our shareholders and for all of our stakeholders. And whether that's in Ghana or some other jurisdiction, we'd never want to pigeonhole ourselves from that perspective.
Well, look, I think we covered everything pretty well here. We'll stop there for now with any closing comments, of course, but we covered a lot for this introduction podcast. And I'll leave you with this question. For potential investors who are listening in, the company has a market capitalization of about 33 million Canadian dollars. Why should Newcore Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
You've got a management team that's truly aligned with shareholders. We own 20% of the business, and if you're buying Newcore today, April 11th, you're buying it at a discount to the management team and board. We're all truly aligned and see the tremendous upside potential that this project has. Huge amount of optionality within the project. We've talked in some detail about how, for a company of our size, we've got a project that we can put into production, but then has district scale exploration above and beyond that. We're trading at $11 per ounce in the ground. We'll call it $11, $12 per ounce in the ground today. That's less than it costs to discover ounces in Ghana. We're trading at less than zero point 0.1 times the NPV of the project. So I see it as a tremendous value opportunity. So you've got fundamental underpinning of value with exploration upside, which I think is unique to find within a company of our size. And another metric I might point to is we've raised 39.5 million Canadian over the last few years, of which the bulk of that has been invested into the project outside of the cash that's sitting on our balance sheet today. So you're buying it at roughly the cash that's been invested into the project over the last few years. And obviously, Ghana is a tier one jurisdiction to be operating in. So aligned management team, good capital structure, district scale exploration, fundamentally underpinned by a very robust PEA that we put out in 2021, with what I see as a catalyst with the upcoming PEA that we'll have out in the next month or two. So those are the reasons I'd be looking at Newcore today.
Last thing, best way for folks to reach out to the company.
Yeah, so we're always very keen to engage with investors. We've had a lot of very good feedback on the content that we put out on social media. So I'd encourage people to follow us on LinkedIn or Facebook or Twitter or the various social media platforms out there. I'd also encourage you to go to our website. We've got a lot of detail on the website, and there's different ways of getting in touch with us through the website. So I'd encourage people to reach out, and we're happy to answer any of the questions that people may have.
It was good to have you on the program, Luke. Thanks for taking the time today and keep up the progress at Newcore.
Yeah, thanks a lot, Andrew. Great chatting with you, and I appreciate all the good questions that you came up with. It's always very helpful for a conversation like this.